Friends, welcome to Sound Money. If time really flies, January of 2026 will be almost over, and you find that the price of silver is no longer the current double digits, but has broken through the $100 mark and reached $110. At that moment, how would you be feeling? Would it be slapping your thigh in regret? Hey, if only I'd bought some back then. Or would you be looking at the heavy silver coins in your hand, glad that you understood the situation and secured a solid asset for your family? Recently, rumors about a silver breakout have been rampant, and all fingers are pointing to a mysterious point in time. March, some say this is just fear-mongering, but amidst all this noise, I hear the sound of the wheels of history turning. Is this ultimately a game of capital, or is it a once in decades opportunity for wealth redistribution for us common folk? Today, let's take our time, and in the simplest terms, I'll lay bare the 4 shocking truths behind all this in one go. Today's content is very solid, with extremely high value, so everyone please be patient and watch until the very end. All right, let's get started. Recently, while walking down the street or at family gatherings, many old friends have been asking me the same question. Gold has risen so fiercely in the past 2 years. Now even buyers' hands are shaking. Is it silver's turn to perform? Some other friends are even more perceptive, asking me, I heard that if you want to buy large silver bars from silver stores now, you have to queue up and pre-order them. Is that true, my friends? Your intuition is spot on. Ducks are the first to know when the river water warms in spring. The market's atmosphere is indeed changing. The silver market right now is just like that kettle in our kitchen that is about to boil. On the surface, it seems relatively calm, occasionally letting out a few small bubbles, but underneath the lid, that scorching hot energy has already built up to its peak, ready to blow the lid off and gush out at any moment. When we do investment and financial management, let's first talk about the most basic and honestly the most easily overlooked point. Where did the stuff actually go? We know business best, and the principle of business is simple. Scarcity creates value. If at the rice shop down your alley, the rice in the vats is decreasing every day, but more and more people are coming to buy it, and the owner even posts a notice saying, shortage from the supplier, it'll be even harder to get stock next month. What would you do at that point? I believe most people's first reaction would be, hurry up and buy a couple more bags of rice to hoard at home. Only then will I have peace of mind. Right? The current silver market is facing just such a situation of the rice vat hitting bottom. This isn't me just making up stories here. We have solid proof. According to public data from the world's most authoritative institutions, like the London Bullion Market Association, LMA, and the New York Mercantile Exchange, COMEX, in recent years, the visible inventory of silver, meaning those silver bars everyone can see that are registered in warehouses, has been declining at an astonishing rate. Some data shows that, compared to the peak a few years ago, the inventory levels in some core warehouses have even plummeted by more than 70%. This is like a large reservoir where the water level used to be full, and now you can almost see the mud at the bottom. What does this mean? It means that the spot silver that can be readily traded and shipped out globally is actually in very short supply at the current global consumption rate. This inventory might only be enough for the whole world to use for 1 or 2 months. This is unimaginable in the financial history of the past few decades. Previously, the safety stock line for commodities had to be maintained at 3 to 5 months or more. Now this safety line has long been breached. The warning lights have been constantly flashing. It is just that many people who only look at K-line charts haven't seen it. At this point, some friends might ask, since the inventory is so low, why didn't prices skyrocket in the past 2 years? Why can I still see silver quotes fluctuating on the internet? Excellent question. This involves an unspeakable secret in the financial market called the serious decoupling of paper silver and physical silver. You know, right now, in that big casino on Wall Street, the vast majority of the tens of billions being traded up and down every day are actually silver futures contracts. To put it bluntly, it is just a piece of paper, an electronic slip in a computer that promises to give you silver at some future time. But financial institutions, in order to make money, to provide so-called liquidity, the amount of this paper silver they issue far, far exceeds the real silver that actually exists in their vaults. Let me give you an analogy. It is like a bakery that actually only has 100 freshly baked loaves of bread in its oven, but it prints and sells 35,000 bread coupons to everyone. This isn't the first time something like this has happened in history. As early as the 70s with the famous Hunt brothers cornering the silver market, and the American retail investor short squeeze from a few years ago. Both were because physical supply couldn't keep up with paper trading, and the current inventory situation is more severe than at any time before, especially March of every year, which is a major month for futures delivery. Why is March crucial? Because it is often the first quarter settlement point for many companies, and also the day many contracts expire. If those who are short selling can't produce physical silver for delivery by then, they'll have to buy spot from the market at any cost. At that time, whether the price is 50, 80 or 100, they have to buy. Otherwise, it is default and bankruptcy. This kind of buying frenzy is the most powerful fuel for pushing up prices. So my friends, don't just look at the numbers on the computer screen, look at the goods in the warehouses. When paper can't be turned into silver, the explosive power of that price is beyond our imagination. This is the first logic we're going to talk about. Physical is king, inventory is critical. Now that we've talked about the low inventory, let's take a look at the high demand. This is also the biggest and most fundamental difference between silver and gold, and a point that many novice investors easily get confused about gold. It is a purely monetary metal. When we buy gold, it is mainly to be made into jewelry, gold bars, or to be stored in the underground vaults of various central banks. It is basically not consumed. A gold coin from the Roman Empire thousands of years ago can be melted down and made into a gold chain today. It has always been there, just in a different form. But silver is different. Silver has a special identity. It is both a currency and an industrial metal. And now, more than half of its use is industrial. That is to say, it gets used up, becomes part of a product, gets consumed, and is very difficult to recycle. What has everyone noticed the most in recent years? Is it that you can see solar panels on rooftops everywhere you go? Are there more and more Teslas and electric cars on the road? That is right. The three hottest sectors in the world right now, where governments are desperately pouring money into subsidies, are photovoltaics, solar energy, electric vehicles, EV, and AI, artificial intelligence. Every single one of these three fields cannot do without silver. Let's first talk about the photovoltaic industry. You all might not know, silver is the most conductive metal in nature. Bar none better than copper, better than gold. In the manufacturing process of solar panels, there is something called silver paste. It is an absolutely crucial material, responsible for conducting the electricity converted from light. Without silver, the efficiency of solar panels would be greatly reduced. Although scientists have been working hard, trying to figure out how to use less silver or replace it with cheaper copper, but to ensure power generation efficiency and 20 years of durability, silver's position is currently still unshakable. Moreover, as the world strives for net zero emissions and pushes for green energy, the number of solar panel installations is exploding every year. Even if the amount used per Pascal is reduced, the total number of installations is too large, causing the total demand for silver to keep going up. Some authoritative organizations predict that the photovoltaic industry alone might consume more than half of the world's annual silver production in the coming years. What a terrifying number that is. Let's take another look at electric vehicles. The amount of silver used in the electronic components, control systems, and various switch contacts inside a single electric vehicle is twice, or even more than that, of a traditional fuel car. Now, everyone knows electric vehicles are the future trend. The penetration rate is getting higher and higher. And this gap will only get bigger and bigger. And then there are the hottest AI servers right now. Everyone is talking about NVIDIA. But did you know, in order to pursue faster instruction cycles, advanced chip packaging and high-frequency connections all require materials with excellent conductivity. And silver is naturally the top choice. There is a very key point here, friends. You must listen carefully. Once this silver is made into, and at the end of the first quarter of every year, it is often when these global tech giants and major manufacturers reevaluate their supply chains for the entire year. If they find that there isn't enough silver on the market, what would they do to prevent their factories from shutting down? They would panic, buy and stock up, regardless of the price. Just grabbing it first is what matters. This is the rigid support from the industrial end. And this force is much, much stronger than US retail investors buying a few silver coins. Know that we're done talking about silver itself. We need to step back, broaden our perspective, and look at the overall global environment. We often say, when the big river has water, the small streams are full. The flow of global capital determines the fate of assets. In recent years, when you go to the wet market to buy groceries, or go to PX Mart to buy some daily necessities, don't you feel like money is becoming less valuable? Before, if you took $1,000 to the supermarket, you could buy a whole bunch of fish, meat, vegetables, and eggs. So much that your hands could barely carry it all. And now, maybe you buy a couple of things, get some fruit, and the $1,000 is gone. The reason behind this, which we all know without saying, is the flooding of currency, especially the United States. We see the scale of US national debt constantly breaking historical records. Just like a snowball rolling down a mountain, getting bigger and bigger, unable to stop. A debt of tens of trillions of dollars. Just the interest to be paid each year is an astronomical figure. March of every year is often a key point for the US government to handle the debt ceiling and discuss the fiscal budget to cope with the massive debt and a potential economic recession. The US Federal Reserve, Fed, actually doesn't have many tools at its disposal, although they're now paying lip service to fighting inflation, maintaining high interest rates, and even talking about shrinking the balance sheet. But if we look at history, we know from a long-term cyclical perspective, in order to prevent a national debt default, to stimulate economic data, devaluing the currency and turning the money printers back on QE is almost an unavoidable choice for the government. This is what is called financial repression in economics. By creating inflation, the debt is diluted. In this process, who gets hurt the most? It is us ordinary folks who honestly save money, holding on to cash and not daring to move. The numbers in our savings accounts haven't changed, but the things we can buy have become fewer. This is having our wealth invisibly stolen. When the market expects that the Fed might, at some point in the future, flood the market with liquidity to save it, where will all the smart money around the world run to? They won't stupidly stay in cash waiting to be diluted. They will flow into hard assets. What are hard assets? They are things endowed by nature, things that cannot be printed at will by humans. Gold is the big boss of hard assets. It has already had a huge rally, hitting an all-time high, making many people feel it is out of reach. And silver, as gold's little brother, also possesses monetary properties. Historically, silver was also real money, but its market is much smaller than gold's, so its elasticity is greater. It is like pouring the same bucket of water in. If you pour it into the ocean, the water level might only rise a tiny bit, but if you pour it into a small pond, the water level could surge. This is why in a precious metals bull market, silver is often the vanguard of the second half. Its explosive power is often even stronger than gold's. So this point in time, March 2026, is not just silver's own delivery date, but also a sensitive period when global macro policy might shift and the US dollar's credibility could be challenged. Capital will look for a safe haven, and silver is that safe haven that is both cheap and safe. Finally, let's talk about a concept that is a bit professional but is actually very easy to understand. The gold to silver ratio. Simply put, it is how many ounces of silver the price of 1 ounce of gold can buy. This ratio is a yardstick for measuring whether silver is expensive or not. Over the past few thousand years of history, this ratio was around 1 to 15. That is, 15 taels of silver were exchanged for 1 tael of gold in the last 100 years, as silver lost part of its monetary status. This ratio has averaged between 1 to 40 and 1 to 60. In other words, exchanging 1 piece of gold for 40 to 60 pieces of silver. People thought that was reasonable. But what about the last couple of years? This ratio once soared to 1 to 80, even above 1 to 90, and at its peak, it even broke past 100. What does this show? This shows that compared to gold, silver was too cheap, was severely undervalued, just like a pearl forgotten in a corner. In the financial markets, there is a powerful force called mean reversion when something deviates too far from its normal track. It is like a stretched rubber band. It will always snap back. When the gold to silver ratio starts to correct, there are usually 2 scenarios: either gold plummets or silver skyrockets. Given the current global geopolitical turmoil, the uncertain situation in the Middle East, and central banks around the world buying gold, the probability of gold plummeting is relatively small. So there is only one path left: a catch-up rally for silver. If the gold to silver ratio is to return to its historical average of 1 to 60, or even the more extreme 1 to 30, on the premise that the price of gold remains stable or rises, it is completely in line with mathematical logic for the price of silver to double. This is not fantasy, this is math. Moreover, history is always surprisingly similar. Looking back at the major fluctuations in the financial markets in the past, such as after the 2008 financial tsunami, the great silver bull market of 2011, and the post-pandemic rebound in 2020, many turning points and breakout points occurred in the spring. This is not just a coincidence, but rather a seasonal window for fund settlements, policy announcements, and shifts in market sentiment. So, when we stack these 4 logics together, extremely low inventory, inelastic industrial demand, currency depreciation, and value correction, you will understand why there is a view that in March 2026, silver might see an epic market run. This isn't about luck, it is about the layer by layer stacking of fundamentals. After saying all this, some impatient friends might be feeling all fired up, itching to rush to the silver house and bet their entire fortune. Please wait. I must, at the very end, tightly grab everyone's hands and nag for a bit. We invest for the purpose of making life better, to give our families a layer of security, not to gamble, and even less for that illusory dream of getting rich overnight. The market always has risks. No deity can 100% predict the future. Even if all the logic is correct, the market start time might also go through a shakeout via volatility. If you use borrowed money or next month's living expenses and medical money to invest, then your mentality will definitely collapse you. For our ordinary families, especially for friends who are looking for stability, when faced with such a trend, what is the best strategy? I'll give you 3 pieces of advice. First, don't panic and don't be greedy. Don't chase the high just because you see it has gone up, and don't sell low just because it has gone down. Maintain a level head. We enter the market because we understand the trend, not because we heard some news. Second, physical assets are primary, and what is in your pocket is safe. For friends like us with a stock, accumulator mentality, tangible silver coins and silver bars in your hands, locked in your own safe, are always more reassuring than the numbers in a mobile trading app. It has no counterparty risk. It won't default. It can help us hedge against the risk of currency depreciation. And it is also excellent to pass down to our children and grandchildren. When you are holding the physical asset, price fluctuations are, to you, just the jumping of numbers, not a gain or loss of wealth. Third, build your position in batches and invest with spare money. Treat silver as part of your family's asset allocation, like buying insurance. Don't try to buy at the lowest point. That is impossible. Set a plan to buy a little every month or quarter with your spare cash from living expenses to spread the cost over time. This way, no matter how the price fluctuates, you'll be able to sleep at night. Fourth, subscribe to me and keep up with the team. The value restructuring of silver is happening. This is a marathon, not a 100-meter sprint. In this process, there will be noise, there will be volatility, and there will be shakeouts from Wall Street. I will always be here, helping everyone keep an eye on the market, sharing the latest information and logic, and being a companion on everyone's investment journey. The mission of our Sound Money channel is to help everyone protect their wealth and live a stable, prosperous life in these changing times. Making money is important, but sleeping soundly is even more important. All right, that is all for today. If you feel that today's in-depth analysis has helped you see through the market's fog and put your mind at ease, please don't forget to hit the like button for me. That is the greatest encouragement for me. Please also subscribe to our channel and share this video with your friends who are also worried about their retirement funds. We will continue to be here to be the beacon on your path to wealth, helping you watch over every rising storm. No matter how the world changes, I hope everyone can eat well, sleep well, and be able to laugh. I am your friend. See you in the next video, and I wish you all peace and safety.